Hello, everybody. We'll get started with the fundamental analysis webinar this evening. My name's Troy. I'll be presenting. I'm a senior account manager with AvaTrade. Before we get going, let's do a quick systems check and make sure that everything's working all right, that you're hearing me clearly and seeing the screen all right. Just type OK in the chat box if everything is functioning properly. Okay, great. I've got enough responses. Thank you very much. Looks like we're up and running fine. Okay, so a little bit of a dead day in terms of U.S. Market and news. It's a bank holiday in the U.S., President's Day, so some of the stocks and things aren't moving. Now the futures trading is still occurring, so we've got the U.S. indices moving, and we always have gold and some other assets going, but other assets around the world are moving as well. And the main focus today, really what drove the market and is still driving the market, is China. And we'll take a look at some fundamental news on that. And we'll kind of roll that into some other assets that are related to China and some announcements that are occurring later today and tonight. So we've got plenty to look at, some nice movements that occurred. As we move forward, keep in mind that all investments have risk. I think we all understand that by now. No one trade is guaranteed to profit. When you're trading FX, futures, CFDs, spread betting, these different types of assets that we offer, no one trade is guaranteed to profit, quite obviously. But the reason we're all here is there certainly are great potential profits to be made if we go after it in the right manner. And so from an educational perspective, that's our pursuit this evening, is to go over some strategies, some concepts, some information that should help your trading strategy, to add some tools to your tool belt, so to speak, to assist you in either developing a new strategy or improving upon your existing trading strategy. Keep in mind that what we cover is not meant to be financial advisement, but is obviously, like I stated, from an educational perspective. Now, as we get going, fundamental news has two main types, and I've covered this before for those of you that have been in the webinars, but we'll briefly go over the idea. One type is fundamental news that you can predict when it will be, what it will be about, what we call regular economic events. And we'll take a look at that. There weren't a lot today of that style because of the bank holidays in the US and Canada, but there are some economic events, I think, that will have more significance tonight and through the morning. And so we'll take a look at that and talk about how we can plan our strategy around those in unison with the news that occurred today already. And then the other type of fundamental news would be extraordinary fundamental news, which is stuff that you can't plan for the exact timing or topic. And within your trading plan, you need to account for those sorts of announcements that are unexpected, like China, US trade war or trade negotiations, developments, those things. You never know when a story might break, or something new about Brexit was in the past that's a little bit less now with the breaking stories about that. But you never know the next article about coronavirus now, that it's getting worse or getting better, and then the markets react. So this type of fundamental news, you just don't know exactly what it'll be or when it'll be. And so within your trading strategy, you need to manage the risk for that type of fundamental news and the opportunity for it as well. And so we'll talk about some ideas of how to manage for things that you just don't know when or what they'll be in terms of the scope and nature of the fundamental news. Okay, so hello, John. Glad you're here. Okay, so let's go ahead. We'll take a look. And if anyone has questions, comments, if you want to give some input about the topic, please share or please ask. So as we go, this was the main driving thing through the day today. Okay, Chinese support measures buoy world stocks. So because of the coronavirus and the fear that that's going to affect the Chinese economy, which we talked quite a bit about last week, which you may not see those effects until the coming weeks and months as we start looking at factory production numbers and these economic reports that come out. Maybe we'll see a dip further than they were already experiencing in China, which, you know, their economy hasn't been doing also great these past months. So because of that fear, we can see that the Chinese government is promising to give stimulus, okay? Further stimulus, they go on to talk about it here, to support the Chinese economy, to counteract the potential hit from the coronavirus. So with that news coming out, that made the world stocks happy, and indices. And so, you know, it's such a global environment anymore. You might say, well, why would stimulus in China affect the DAX index, or the NASDAQ or other places around the world? You have to understand that Chinese economy is the #2 economy in the world in terms of size. And, you know, there are factories in China from all around the world, companies from all around the world, and lots of importing and exporting going on. And we'll take a look at some assets that directly relate to China, namely the Australian dollar. We can look at the Canadian dollar and oil, and some other things that relate to the economic success or the economic woes of a large economy like China. And so keep that in mind. That's really been driving the market today. And so as we look at the scheduled economic news, not much going on, pretty dead day. But what we'll focus on is the only major announcement on today's schedule. The 3 bullheads means it's really more of a high impact announcement. There's RBA meeting minutes for Australia, and that's 7:30 New York time, 7:30 p.m. So GMT time, you'd add 5 hours. That's after midnight, right? So going into the late night, early morning, you're going to see GMT time, 12:30 a.m. tomorrow, major announcement on the Australian dollar. Okay, 3 bullheads. And so, and on other platforms, it might, you know, Forex Factory, it shows, you know, a different symbol. But in general, 3 bullheads on this platform means high impact, high volatility expected. And so another platform, Forex Factory, does red, orange, and yellow for high impact, medium impact, and low impact. So there are different economic schedule platforms that you can use. This is just one of them. And so we'll keep that in mind. That's late night. And then if we look into tomorrow, which is early morning, right? If we're looking, this is New York time. So GMT time, we're talking, if this is 4 a.m. New York time, we're talking 9 a.m. GMT time. Some announcements coming out of China. Very important. China, 2 bullheads. This is information that could move the markets, okay? And you've got several announcements, Hong Kong as well, and then Chinese announcements, and you know, 4 different announcements here regarding loans and financing, and one of them is a medium impact announcement. Those announcements are inflated potentially, the reaction to them, because of what's been going on with coronavirus and the stimulus now that's been promised by the Chinese government. So that could really move the markets. And so you have to think about timing and potentially either being up at that time, okay, to place some orders, to look at the chart. Where's the movement? Where's the resistance and support? Place some potential pending orders for breakthroughs just before those announcements. Or if you're not going to be up at that time, or you're going to be at work, or whatever it might be when that time comes, 9 a.m. GMT time, maybe you need to place your pending orders now if you want to get in on potential breakthrough moves, or you could look for market moves accordingly. So those are some things coming up overnight, okay? And so then we can look at some other things that happened. Kind of bad news for Japan, okay? That's not a good headline. Japan on brink of recession as economy contracts, virus heightens risk. They're worried there could be some outbreak in China, and they're on the brink of a recession, apparently, right? So that probably doesn't do well for the strength of the yen right now. Okay, so those are some things to keep in mind. Now, if we go then to my demo account, and I've got the live movements here, you can also, if you have a second screen or on a mobile device, mirror on your live account if you want what we're looking at. So this is the NASDAQ, and we see coming out of the weekend, here's the 14th, coming into the 17th, right, which is today. So we see, and maybe we go to 15-minute candles. We see coming out of the 14th, which closed with some upward momentum. And then let's get the date. There's 14th. That's Friday. This is Friday. This candle here is Friday. And then this big breakout candle was late night, last night, early this morning. This is the open after the weekend. So there's a bit of a gap here. There's a space up. It gapped up. Okay. And so for anyone who doesn't understand what that means, when the market closes a lot of times on Friday and then reopens on Sunday, which is really pretty much all assets except cryptocurrencies, because there's off hours trading with hedge funds and big banks and things going on, even when the retail market's closed, when the market reopens after the weekend, Sunday night / Monday morning, the price can change drastically at open without the movement occurring. It just opens at that new price. Okay, that's called a gap. When you don't see the lines on the chart, you just see a gap from one spot to another. And if we zoomed in on 1 minute candles, you'd see the gap even more. Okay, it would look bigger, more prominent. So that upward gap corresponded with the news out of China about stimulus. Okay, and also some word about maybe fears dying off about the coronavirus. You could see over the weekend the reports that the increase in the number of cases found in China didn't increase as much, as drastically as it had been. So a couple reasons for positivity on China. Okay, and so NASDAQ jumped. We can see the upward momentum. You easily could have gotten in on this as soon as this was in an uptrend at the opening, and you could have been on 5 minute candles. Let's go back. Here's the slight gapping. Here's the jumping up from 14th to 16th. Okay, this was the climb. And even if you got in after the first climb, let's say you missed it, okay, the first 5 minutes, no problem. So you draw a line at where it started to form a support. You watch it. It comes down to that support. This was your first opportunity to trade up from the support. Okay, so here was a support that formed, support. After the open, the quick rush up, support. It came down, support. If you check the news by then, these are 5 minute candles. You could easily have had time to see the news reports and seen, positive news, stimulus for China, etc. Okay, and over the weekend, you could have seen the positive reports about the coronavirus as well. So you might be thinking sentiment up, fundamental news, positive, upward headwinds for the indices. You see confirmation of that with the open gapping and a rush up, and then it stabilizes. Okay, without even filling the gap back down. It didn't try and correct back down to where it closed Friday. A lot of times if there's a gap, it'll start a downtrend and come back before climbing. It never did. It formed a support, respected the support, and went up. So how would you know to trade up from the support? The fundamental news made it pretty clear. Upward momentum, support forms. You go with the fundamental news. If you're a fundamental trader, would easily have worked out here. Once it started to consolidate sideways up here, resistance, that might have been your spot. If you're scalping, you take your profit. Okay, so easily you could have been in at 96.56 and been up, I don't know, 20 points or so, $20, I should say, 200 points on this movement. Okay, not a huge move, but a nice move for scalping. All right. Now, if we go to, let's say, 15-minute candles, look at that. 5 minute, let's go back. 5-minute, we had an immediate opportunity to trade up from the support, right? Right here. If we go to 15-minute, we'll see it hit the support again over here. And again, even later in the day. And by later in the day, I mean just a couple hours ago. You could have traded up again from the support, and again, you'd be in the money. Why would you trade up from the support instead of banking on a breakthrough? Fundamental news again, okay? Still, the news seems positive, news about stimulus. Even if you weren't up late night, early morning, you didn't catch this breakthrough, you didn't catch the bounce off the support here. You had another opportunity here, and it's in motion. You'd be in the money right now, okay? Any questions or comments so far? Or type okay if you're with me. Okay, so you might wonder, okay, that's the Nasdaq. What about a Chinese asset? It is China after all. So we can take a look at, we have the China 50. Let's find it. It's an indice we offer. Here it is, China A50. Okay, same thing, isn't it? From Friday's close to the open, it gapped up. Okay, this one did go up and bounce, but then kept climbing. Okay, and when this happens, it gapped up, came back down really quick. Then what you're doing, it already about filled the gap, right? So what you're doing is waiting for it to break to a new high to continue the uptrend. So once it broke here, here's your breakthrough. Okay, after the gap up, the climb, the initial pullback down, and then it climbs back up and it breaks the resistance right here. Okay, so again, fundamental news says buy on this asset. The gapping upward at the open and the momentum upward on the chart tells you buy. And then the technical analysis, you draw your line, you can be patient. It breaks through the opening high after the pullback. That's an uptrend. That's a breakthrough candle on the resistance. Easy profit. Okay, right about now is when I'd probably be taking profit. Okay, if I was scalping, if I'm a short-term trader. It broke through, I get in, it climbs, it consolidates sideways, and there you go, you can take your profit if you're scalping. Okay, short-term trading. If you're long-term trading, maybe you close part of it. Bank some of the profit and see if it continues to go your direction. Okay, so this was not exclusive to US assets or to Chinese assets. Again, it's a global market, especially when China is involved. All right, and we can take a look at European indices. We can look at others around the world. There's the gap up. Okay, here climbed. This one leveled off sooner, came back to the open price. That could be an opportunity. Okay, this one, if you're looking for, technically speaking, an opportunity to trade on, this opened. Here's the open right here. Here's the slight gap up in the climb. The OMX 30s pulled all the way back to the open price this morning. Okay, you see here? So that's actually right back on the support level. So you have an opportunity if you want to go with the fundamental news as we've seen it. You have an opportunity to get in from the support if you believe in a buy. Now, obviously, it could break the support. News could change. There's no guarantee it's going to bounce up like the Nasdaq did just an hour ago. But this is what the indices around the world have been doing. So they're not all in the same step right now. Nasdaq just bounced an hour and a half ago before we started back up off the support. This one bounced once, twice, testing it. Okay, so if you want, you could wait for confirmation that this, if it breaks back above this little high point here, maybe then you get in with a buy stop. That way you wait for the uptrend to start. It's not a bad way to go, is wait for confirmation on the smaller candles. So you draw a line, you say, okay, here's the first little resistance point. If this bounces up off the support and breaks through this little resistance here, then you could have a buy stop pending order waiting to buy right up off that location. And then you still could make a nice little profit up to this high point from earlier today. Okay, so that's not a bad way to go, waiting for confirmation. for this to bounce off the support and break this little high point here, showing you an uptrend again, and then you can get in with a buy stop. How would you program a buy stop at that location? Very easy. Open the trade or the order window, switch from market execution depending, and then your buy limit could be up here. Buy stop. Buy stop buys from a higher point. Buy stop. If you were waiting for this to bounce and give you confirmation of an uptrend, you might enter on a buy stop up here somewhere around, I don't know, 1891 or something like that. So your at price could be 1891, if that makes sense to you. Okay, or whatever price you would want that you would be convinced it's uptrending again. Just an idea if you didn't want to trade up during this little slight downtrend. If you trust the support, then you could buy now. You don't have to wait for confirmation to come up. That's up to each individual trader how aggressive you are. But we see going back to, let's say, the NASDAQ, we see what the NASDAQ already did. It's the same setup. It already bounced up. Okay. Okay, so let's look at a couple more examples, indices maybe around the world and how they reacted kind of similarly. So I think I passed them up. Let's back up a bit. Okay, here's the FTSE. Okay, look at the gap. All right. Here's the gap up at the open. Here's the pullback, filled the gap slightly. And then once it broke to a higher high point, right here, okay, here's the open. Momentum died, filled the gap some, which is expected. It happens. And then it hit this high point, resistance, resistance, resistance. This is where you confirm an uptrend after the upward gap right there. It broke the high point. And look what happened. As soon as it broke that initial surge at the opening and came back, once it broke that resistance, look how rapidly it climbed then, right into the current movement. Okay, so again, you had many opportunities right at the open or even just a couple hours back to still get in, or a few hours back in this case, we're on 15-minute candles, to still get in on a breakthrough, a late entry point, and still look at the climb you could have been involved in. Okay, that's 100 from this late entry on the breakthrough. After the gap up, showing you the direction of momentum, after seeing the fundamental news about China, after the pullback comes up, hits resistance, you put your buy stop pending order up here, it breaks through and you enter. And from then up till now, still $100 climb or €100 climb, we're on the FTSE, in value on the chart. Okay, 1,000-point climb. So very nice, even getting in late. So some other assets, oil. Before we look, someone asked a question. Let me have a look. Aruna, good question. Aruna's asking about the effect of coronavirus on the market. How long will this last? If it's the same news that's already known, it tends not to have much effect, right? It's when the unexpected news breaks. Like right now, everyone's saying, oh, it seems to be slowing. The spreading of it seems to be slowing. If something came out that contradict that, probably see gold shoot up. You'd see the indices pull back. Okay, it's highly likely that that would happen with unexpected news. If you just continue to see the same thing, still showing a slowing of the spreading, that sort of thing, you kind of get the same effect. Yeah, good news about the coronavirus, Aruna, tends to bring gold down right now. Bad news about it tends to bring gold up. The opposite effect compared to the indices, because gold is the safe haven asset. Okay, so the question here is then about oil. I wanted to look at oil next. What do you think happened with oil today? Without looking, even if you didn't look at the chart. Good news on indices. What do you think happens with oil? Should go up, right? If people deem something to be good news for the economy, for the markets, that tends to drive oil up because positive economy equals more demand for oil typically. And so people speculate immediately on the price and drive the price up. Okay. It isn't that because the coronavirus news was good that automatically already there's more demand for oil. It's speculation that there will be more demand for oil. And so people buy it. It drives the price up. So uh, we can take a look at oil, and that's exactly what happened. Oil gapped up, pulled back. Here's a classic fill the gap strategy. Okay. It gapped at open. Friday's close, Monday's open. Up here. Once it started to fill back below the entry price right here, you can trade down with your stop loss above the entry price. So entry price was here at this wick. It opened and gapped exactly to here. Went like this, came down, and as soon as it entered the gap, a strategy is to trade the filling of the gap, and it came all the way down. If you follow this wick, it exactly filled the gap and then back up. So you had an opportunity, once it started a downtrend, to trade to fill the gap. Once it reached Friday's close, meaning it filled the entire gap, you already know the news was positive for oil. That's why it gapped up. It refilled the gap, quickly check the news, and you see still good news on the markets. And so perfect opportunity to trade up from Friday's close. Why should it break below Friday's close when there's such positive news? It gapped up. Unless you check the news and there was the reverse news and they said, oh, never mind, bad news about coronavirus. Never mind, China's not going to give stimulus. That didn't happen. That good news still existed. So once it filled the gap back down, you should anticipate most of the time when the gap was up and it refilled the gap down, barring any new fundamental news, many times it goes rushing back up to the high that it had when it first opened and then potentially past that. So easy entry point was when it filled the gap and reached Friday's close to buy up. Easy take profit mark was when it got back to the high that it reached before it pulled back down, which was just about 5-10 minutes ago. That's your first spot that you, if you're scalping, that you would have taken profit. So this was a workable strategy that downtrended and entered the gap. Easy shot at taking the fill the gap strategy, and then easy choice to trade up once it reached Friday's close. And there it went back to the entry high. Easy profit. Okay. And so, you know, those movements, you'd say, well, they're only like 40-cent movements. What's the big deal? Listen, it's 30 cents, let's say, movement. If you do a one lot position, 1,000 barrels times 30 cents, okay, it's a nice little profit. So it adds up. It doesn't have to be a huge movement on the chart to be a nice profit. You know, a $1 movement with a one lot position is $1,000 profit. So 30-cent movement, it's $300 profit. It's a nice little scalp. And I'm not saying everyone should trade one full lot. It's, you know, balance dependent, goal dependent, what size trade you should take. But the point is the potential's there on these little movements. And it's about timing. It's about paying attention to fundamental news and getting in at appropriate locations with your technical analysis. Not everyone's available to watch, to get in at these correct times, but you could have put a pending order down here at Friday's close just in case it returned down there. You didn't have to be watching. Pending orders can be your what if entry points. Let me see if I can address your question. How do you use fundamental analysis to determine what stocks to purchase? Well, that's a good question. So let's have a look at a location. We'll divert. And if anyone has any questions about oil, let me know. But it's certainly upward momentum. It's also broken the opening high. You see here, it broke through. So it seems to be ready to climb more. It broke the high point. Where's the next resistance level on oil? I don't see the next resistance level until here. I had to go to the 4-hour candles to find the next resistance level. So the upward momentum it has now we haven't seen since the last time it reached 53.3. So from 52.5, it looks like it could run to 53.3 before it reaches any major resistance. Okay, so if you're taking a shot at that, it makes sense fundamentally. And technically speaking, to get below the resistance level that was broken right here, you would only have to put your stop loss down about 20 cents per barrel. So that's not much. Okay, it broke this resistance here. Stop loss might make sense just below that resistance. So minor risk for potential profit of about 3 times as much to the next resistance level, which we can find on the 4-hour candles. So that's a potential move on gold going with the fundamental news, or I'm sorry, on oil going with the fundamental news, and also with the technical analysis as well, as it broke through just a little while back the resistance level. Okay, so the question about stocks. Let's say you're interested in Apple, and you say, well, where do I look to find out about Apple? Okay, again, there's more than one platform to look at these sorts of things. Gerard, oil and Canadian dollar tend to be positively correlated. Not all the time, but most of the time. And what I mean by that is, as oil price goes up, that tends to be good for the Canadian dollar. Why? Because the Canadian economy, the number one export GDP wise for their economy is oil. Okay, now they don't produce as much oil as, say, the US, but oil means more to them than it does to the US. And what I mean by that is the US produces a lot more oil than Canada, but it represents a smaller proportion of the US's GDP. For Canada, the amount of oil they produce is less than the United States, but it is a much larger percentage of their GDP. So as oil goes, many times so goes the strength of the Canadian dollar. Okay, so if you're looking to trade Canadian, what should be weak today? By the way, Gerard and everybody else, what did we see here? Japan on the brink of recession as economy contracts. Virus heightens risk in Japan. So if you think the Canadian should strengthen today because of fundamental news, because of oil strengthening, what should you pair it against? Something that might be weak, right? Strong horse against the weak horse. So fundamentally speaking, the yen has reason to be weak. The Canadian has reason to be strong. So look for your entry points, maybe with the Canadian paired against the yen, if you plan to go with the Canadian. Okay, look for your breakthroughs on the Canadian or your bounces off of the support levels with your Canadian. That would make sense. Strong horse against the weak horse. All right. Yeah, Willem, volatility also needs to have predictability, right? So volatility is good. Then you have to decide if the fundamental news helps you pick a direction. If you're 50-50, you can still trade based on technicals alone, okay, waiting for breakthrough with pending orders, both up and down. And whichever way it breaks, you're in. Or if the fundamental news drives a direction in your mind, then you preferentially pick that direction. Okay, so yeah, Canadian against the yen might make sense here because the yen has reason to be weak according to this article from today. And then, all right, so let's go back. Stocks, how would we trade on stocks? Let's check investing.com. Let's go to earnings calendar. You see this link? Earnings calendar. So how do we find fundamental news on stocks? This is an easy way. So we can go to the filters on the earnings calendar and someone name a stock, I don't know, Apple. So there's Apple Incorporated. And we look and we say, okay, when did they last report earnings? Only a few weeks ago, January 28th. How were their earnings this quarter for Apple? Better than expected, worse than expected? And by the way, these earnings dates are listed on our website for all the assets on our platform. Yeah, better than expected. Earnings per share, higher than expected. Revenue, higher than expected. Okay, was the expectation good? Meaning, were the expectations dumbed down or were the expectations for an improvement from the prior quarter? And we look and we say, okay, the prior quarter, the earnings per share were around 3. The expectations were a rise of about 50% they were expecting. Not only did it rise more than 50%, it blew it away. Okay, so it went up nearly to $5 a share. So not only were the expectations high, they exceeded those expectations. Now that's positive news. Sometimes you look and you see the expectations were dumbed down. The expectations were worse than the prior quarter. That's not the case with Apple. The expectations were high and they still exceeded the expectations. So you can read into these numbers quite a bit. Same with revenue. The expectations were 64 to 88 and it beat that. Okay, so easy to say if we pull up a chart on Apple, if Apple for some reason pulled down to a support level, hey, fundamental news says maybe I buy off that support level. If Apple just broke through a resistance level, maybe I'm in on that momentum as well, because this was really good fundamental news. Now, obviously, pay attention during earnings season. Look on our website, see when the earnings numbers are coming out for these different stocks, and pay attention as it's reaching the date that the earnings numbers are coming out. Those are great to trade on. We went through strategies, by the way, last month during the earnings numbers to trade on these, and the strategies worked very, very well. Good questions. Okay, so let's go back. We've got some questions about oil. Aruna, you could be right. If you feel it's going to go up to 62, certainly then you like my idea with the technicals, with the resistance level being broken here, to at least ride up a scalp to 53 plus. Okay. And again, I'm not telling you guys you should buy on oil. I'm saying the fundamental news says buying on oil might make sense. And the technicals show you that it just broke this resistance today. So the technicals tell you buying might make sense. And you can limit your resistance just below the broken, limit your risk just below the broken resistance for a stop loss. And your potential climb is a lot bigger than that for a scalp. And you could even be in it for longer term if you believe, like Aruna, that it's due to climb even further. That's up to you. Okay, good. So what about something else? Let's look at something different. What's an asset that China buys largely from the US? Let's go soft commodity here. And Trump negotiated a deal that they would buy a lot of this from US farmers. Wheat, yeah, they might buy some wheat. In particular, though, the soybean farmers are happy with Trump's phase 1 trade deal with China. Okay, so as China's economy goes, so go many times the assets that are bought by China. So if we want to diversify a bit in your portfolio, you might look at soybeans. And if we go back, let's say 15-minute candles, what happened to soybeans? Nothing yet, right? Soybeans are not traded on the futures on our platform. So when the US market opens tomorrow, which is tonight, what do you think happens with the soybean price at open? What do you think might happen? Yeah, it might gap up. It might gap up. How do you confirm if there's upward momentum on soybeans when the market opens? Upward gap. Okay. So, yeah, there's a double top up here. What if the gap opens just a small gap? What if it gaps to about here, showing upward momentum, and then pulls back a bit? What kind of pending order could you place if that happens? If it gaps up a bit and pulls back, you could put a pending order above the high point of the gap if it pulls back. If it breaks through, just like we saw with the other assets we looked at, if it breaks through an upward gap pullback scenario and it breaks through that high, a pending buy stop would get you in. And then, as some of you have acutely pointed out already, there's a double top here for a take profit location, maybe up here. resistance, resistance, right? So understanding what's already occurred in the market on the futures many times helps you predict when the market opens after the holiday here, what direction you might see movement, barring any opposite news breaking before then, right? So you may see commodities like soybean taking a jump. Look for the momentum at open. Look for an opportunistic entry point to go with the fundamental news direction that makes sense in your mind. Okay, so you certainly could get a redo here on assets that aren't traded on the futures because they didn't have an opportunity to go through that process yet of gapping and pulling back and then establishing a breakthrough again after the gap. That process could occur with soybeans still and some other assets. Okay, so that's an example of something you could be looking at. Why might we look at the Australian dollar against the yen right now? What does Australia sell to China? Number one export of Australia, used to make steel. Yeah, iron ore, and then also coal. Another large export that China buys from Australia. So many times as China goes, so goes the Australian dollar. So, and that brings us to where I think I want to close. So if we bring up the Australian dollar, let's do, why would I pair the Australian dollar against the yen? Again, if I expect the Australian to strengthen, why would I pair it against the yen right now? What did we look at about the yen? Let me remind you. Japan on brink of recession. Okay, so if the yen has reason to weaken, maybe I pair the Australian against the yen if I'm thinking I'll go with the Australian dollar. Yeah, strong horse against the weak horse idea. So let's bring up the Australian dollar. We obviously have to keep the Australian wildfires in focus as well. That hasn't been good for the Australian dollar. Okay, so if we look at 1 hour candles, looks like there's a resistance level up here. Okay, that would be up about 10 pips, 9 pips. Okay, 9 pip distance. So if you're not going to be up later tonight, remember what else did we look at? I'm not basing this only on good news for China, right? Let's look at what else could give the Australian dollar a jump potentially that we might want to put a buy stop before you go to bed, if you're going to bed, or if you're going to be up when the announcements come, great, you can watch it live. A buy stop pending order above this resistance, about 10 pips up. Okay, if it breaks through that, there must be some momentum if it breaks that. What might give it the momentum? Yeah, the RBA minutes. Good, Delwyn. We looked at that. Let's go back. Let's get off the earnings calendar and go back to the economic announcements. Economic calendar. Here it is. RBA minutes. 7:30 p.m. New York time. Okay, that's the time I have this page set to. So GMT time, that's 12:30 at night GMT. The RBA minutes come out. If you're watching just before that happens, you could then check the charts and see where's the resistance and then put your buy stop above that. If it's good news, if those RBA rate minutes give some reason for the Australian to strengthen, now you have 2 reasons for the Australian to strengthen. The economic news right then, and also the news about China that already occurred that's giving it some upward push. Okay, so that could really cause a surge on the Australian dollar. So you don't have to pretend to know what those minutes will say or the effect they will have. You can prepare for it just in case with a pending order. Okay, a pending buy stop above the nearest somewhat major resistance on the 1 hour candles. Okay, resistance, it's been established. If it breaks, say, 73.97 or even to 74 even, it must have been somewhat significant. And then where's your next resistance level? Up here. Okay, all the way up to 74.25. Even with a late entry, as it breaks above 7,400, let's say, you could gain 20, 25 pips profit before the next resistance level. It's a nice potential profit. Okay. Yeah, and the yen has reason to weaken. Exactly. So now we have three reasons. The yen has reason to weaken. The Australian has reason to strengthen already because of somewhat good news out of China. And then if there's those rate minutes or the minutes coming out for the Australian dollar at 12:30 a.m. GMT, if those are good for strengthening the Australian, then you could have a big breakthrough. You could have a breakthrough candle like this one. Okay, you see the downward candle, what it took to get below this level. Typically, whatever momentum it took to get below a support level, this is the same type of momentum you could potentially see as it breaks back above. So this kind of candle on the way down means you could see that kind of candle on the way back up. You could see a large breakthrough on the upside as well. Okay? And trading's all about potential. It's not being right every time. Yeah, listen, if the news comes out and it causes the Australian to weaken, okay, so what? You didn't lose. Not trading doesn't affect you. If the news went your way, you're going in the direction potentially where you've got multiple reasons for it to really break through hard. So you're maximizing the potential movement with very little risk on the downside with your stop loss on a potential buy stop just back below the broken resistance in that case. All right. So I don't tend to go against Delwyn. Good question. I don't tend to go against the fundamental news. Right now, the fundamental news is with the Australian dollar. So I wouldn't be making a sell off the resistance down. You can if you want. I'm not here to tell you not to, but I tend to go with the fundamental news rather than against it. It eliminates some false signals many times. Okay. If the news right now was bad for China, if the news was good for the yen, then I'd be saying, wow, the closer it gets to this resistance, maybe have a sell position prepared as a sell limit if it comes up to the resistance. That would only be if there was bad news for the Australian. Right now, there's not. So that's not the plan, fundamentally speaking. Okay. That little difference can improve your false signal percentage and positive signal percentage just enough to really make an effect on your P&L. All right, so what else is occurring overnight? Remember, there's also announcements on China overnight. I showed you those a little bit later in the night. So again, if the rate minutes doesn't break the resistance, when the China announcements come, if those are positive for China, what do you think happens to this resistance potentially? Again, good news for China tends to be good for the Australian. So you've got two opportunities overnight for the Australian to have reason to break the resistance. First, the Australian meeting minutes. If that doesn't do it, then you've got China announcements as well, overnight and into the morning. Okay, those could be the push if the first one isn't. Okay. And you certainly could put a sell stop below the support if you think it'll fly the other way. It's no problem. I might have a sell stop on the Australian if I'm going the opposite direction below the nearest resistance, paired against the USD maybe, paired against something that should be stronger than the yen. Okay. All right. I think this is a good place to stop. Any last questions before we end things this evening? Okay, great. You may see a new webinar series starting that's offered from AvaTrade, by the way. It's called the Master Webinar, something like that. There's another presenter that's going to be doing some advanced webinars, maybe using an advanced Bloomberg terminal, some different things that might be nice for you to watch. So keep an eye out for registration links for that webinar series as well, okay? All right, everybody. Have a good rest of the day and good luck with your trading. Bye for now.